this morning. If you are listening to this tutorial today, then you are a blessing. It is the 29th of August 2022, and I want to welcome you to 10 lessons. There will be 10 lessons that will move you from having zero knowledge of how to pick a trade and make 0.5 to 5% trading expertise. And in these 10 tutorials, you'll be able to learn how to look at a coin in your trading view, pick the price you want to set in your royal queue, and be able to make 0.5 to 5%. So this will be the first video. And the first video is as simple as download, go to your Play Store or App Store, and once you reach here, you just have a simple task is to write in the word trading view. That's all you need to do, and immediately you write in the word trading view. The application called trading view that looks like this will be available on your screen. And you just need to, there's a word download. That's how trading view looks like. Then you download and have the application on your phone. So we are going to open the application. That's the first step. Now once you open the application, I want you to immediately come down here where you see the word watch list. So what I've not taken you through is registering for the app, because I've already registered mine. So you need to register. They will send you an email. Make sure you finish up all those first steps. They are simple steps, right? They are simple steps because you tap here on menu down here. Right, you tap on menu and then you come to an area called sign in. Then you are able to register your account 100%. So that's the first step. I hope everybody can be able to handle that area of registering for the application. All right, now let's go to the first important step. If you have done that step, then the second important step is creating a watch list. A watch list is a list of coins that you want you put your focus, your energy, your time. Okay, so you tap on watch list like you see down here, and the first step is to add a symbol. So like you see on my screen, there is a word add symbol. So you tap on plus, and where do you get the symbols you add? Minimize your screen, then you basically come to your royal queue application in an area called quantitative. Okay, I hope you can see. I will do my best. On an area here called quantitative, and if after you have tapped on this area called quantitative, then you're going to start picking coins both from general and professional as you create a watch list in your trading view. All right, so we're gonna start. So we're gonna do the first task. So we are going to pick our first coin. It's called Zen USDT. So we are going to go onto our application. We started from below. The coin is called Zen USDT. So you see that I'm writing the full name of the asset, or of this cryptocurrency I'm talking about. We are basically going to do, you see, I picked Binance because I'm using Binance to trade. If you're using Hobby, pick Hobby. If you're using Indodax, right, look for Indodax. Why? Because usually the trading volume is usually different from one exchanger to another. So pick the exchanger you are using to trade. All right, so I'll pick Zen. That is my first crypto. I go back again. Another one is called Zenk. another one is called YFI. I tap on add symbol and I write in the word Zenk USDT. So you write the full name. Then the next one, add symbol, was YFI USDT. Right, I add it up. The next one was YFII USDT. I hope you are seeing very well. I add it up. All right, then I go back again. We have XTZ XRP. So we write XTZ USDT. There we go. Then the next one was XRP USDT. All right. Then the next one is was XEM. Right, USDT. You write the full name. You don't guess around. That's very, very important. Okay. Then we go back. All right. So okay. So we have Uni and XMR. So we go. We write XMR USDT. That's the name of the coin. Then we have Uni USDT. All right, we are moving on a very amazing pace. Then we have TRX Theta. Okay, TRX. So we write TRX USDT. Okay, then we write another symbol is Theta USDT. All right, then another one we have is SXP USDT. Okay, all right. So we are moving. We are still moving. And we are creating our trading view. We have Sushi, Sun, and RSR. So we come onto our screen and we basically write Sushi USDT. All right. And then the next one we have is Sun USDT. All right. Then the next one we have is RSR USDT. We are choosing Binance basically. Then we go back again. We are doing very well. We have REIF, ONT, and OMG. So we start. Okay. We have REIF USDT. You see, I'm writing the full name. Okay. Then we have ONT USDT. Okay, that is Autology. Then we have OMG USDT. Okay, so we are still on creating our trading view application. The next one is Neo USDT, MDX, and Mana. Okay, so we can. Okay, Neo USDT. All right, then we have Mana. Okay, USDT. Okay, we have Mana USDT. I hope you are seeing very well. Okay, now we go back again. MDX. I missed this one. Okay, I missed this one. MDX USDT. So you make sure you're getting all your watch list very, very clear. All right. Now we have LTC, Lit, and Link. All right. So we come here. We write LTC USDT. I hope you see. Then we have Lit USDT. I hope you see. Then we have Link USDT. I hope you see. Okay, so we are continuing on creation. The next one we have Canva, GST, and I. And okay, we have Canva. It's up to how you spell it. USDT. I write the full name. All right. Then we have JST, USDT. Okay. All right. I'm forgetting the third one is. Okay, capital IOTA USDT. Okay, IOTA. All right. Then we have laws. So we have GRT, FTT. We have this one, which is this one. I think it's not that one. Okay, USDT. Okay, we have FTT, USDT. Okay, we are choosing Binance. Okay, we have GRT, USDT, TT. Okay, we are still moving. We are still moving to make sure that we have field, ETH. We have field, so you write field USDT. All right, then you write ETH USDT, that is Ethereum Classic, that is Ethereum. Then we have ETC, Ethereum Classic USDT. All right, so we are still moving on creating EOS, DOT, and Doge. We have EOS, USDT. All right, we have DOT, USDT. Okay, then we have Doge, the Doge coin, a meme coin. Right. Okay, now we are moving. We have Dash, CRV, and C. We have Dash. We have Dash USDT. We have CRV USDT. We're still on the first few steps. All right. Then we have COS. We have COS USDT. Okay. So we are moving. We have Compo, Cake, BTC. We have Compo, USDT. We have BTC, USDT. We have the last one. We have Cake, script Cake here. We have Cake, USDT. All right. We have BTCST, BNB, and BCH. BTC, ST, USDT. We have BNB, USDT, and we have BCH, USDT. We are still creating our watch list. We're a little bit slow, but we are still on the main thing. We have BAT, Atom, and Ant. BAT, Atom, and Ant. So we start with BAT, USDT. Then we go to Atom, USDT. Okay, then we have Ant, USDT. Okay, so we are still moving. We have Acro, Ada, Ave. So we have Acro, USDT. We're still creating our watch list, ladies and gentlemen. We have Ave. Am I writing it well? I need to check up. It is double A. Okay, it is double A, single E. Those are important things I need to look at. All right. Okay, which one did I left Ada. Okay, we are still creating our watch list. Okay. All right, so we move. Now our last coin is 1 inch on the general coins. 1 inch USDT. All right. Now you can see this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52. We have 52 coins from general. So we're going to go to our last area, and that is the professional area. And we shall also start from the bottom. We have XLM. We have XLM USDT. That's our first coin. Okay. And now we shall have Gala. This 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. All right, so you remember we had 52 coins the other side. So if we get 52 plus 22, that is a 4, this is 7. So if this is 22, if you want us to repeat, okay, let me repeat the whole sum. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 7, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75. Beautiful. So basically, Binance Royal Q has curated out 75 coins. It has curated out 75 coins. And now let's get into our second lesson on still the same thing of understanding our trading view. So our next visit area, ladies and gentlemen, is to go to the chart. That's our next visit area. So we're gonna go to the chart. So we open up our chart, and our chart will meet it with some things maybe it doesn't look nice. So our first step before we do anything is to come on the pencil here, on the pencil. That's going to be our first step. You come on the pencil, you tap on the pencil. Now once you tap on the pencil, you see an area where it is written measure, erase, lock, magnet, drawing, hide. Then you come to remove. So what are we removing? That is also another important area. So we have basically and purely moved from we are moving this side like this, and we go to this area where you see remove. All right, so we're gonna remove all drawings and indicators in our screen. Okay, so we remove all drawings and indicators. Then you see automatically here, you see here there is this X. Tap on it, and your screen will look like this. Now that's done, we want to go to the next step. The next step, our next step will be now putting in our time zone to make it clear. So we tap on that area there. So we're gonna tap on it, and we make sure only regular is ticked, and make sure it is ticked count down bar to close. So if you tick, you need to make sure on your screen this one is ticked and this one is ticked. Then we are going to take our energy onto the time zone. Others, if they are ticked, you untick them. So in the time zone, we want to make sure our trading view is working in touch with our area. So it depends where you are. If you are in Uganda, East Africa, Jerusalem is very good for you on the +3 time zone. If you are coming from this side called Nigeria, Lagos is here at +1. Lagos is around here at +1, depending on your time zone. So you tick it, like for me, I'll tick plus Jerusalem. And where will I see if that has entered my screen? You will see on your trading view this area here. Hope you see it, where we have the figures of the coin we are looking at, and you can see very, very clearly that in this area this candle is for 4 hours. I'm going to there, and it's remaining 2 hours 23 minutes and 46 seconds to end. Now let's go to the time frame so we can be able to trade in 1 hour. We can be able to trade in 4 hours and in 1 day. Okay, we can also look at 1 week dependingly. And so what do? Maybe I want to have the 2 hours time frame. I long press, then tap on add to favorite, then I cancel, so it will be there in my favorite. So I don't want to add anything, so you just keep it there. That one we are done. Now the candles we're gonna choose for first time as we're coming to the end, that will be our next tutorial. We'll be understanding the candles, our next tutorial. So we're gonna choose into our screen a type of candles, and how we gonna choose this? All right, so we're gonna tap down here on these 3 dots, and we're going to choose we scroll down here, we choose the chart type, and we're going to choose the hacking ash candles. These ones. So how do we choose them? We long press, then add on favorite. So if I'm gonna remove them, so I come chart type, I long press, then I add on my favorite. Now I've removed them, then I add on my favorite. Alright, now we are just going to do the last thing. The last thing is to learn to sort our coins depending on how they are performing in the market. And how are we gonna do this? If you are having an Android phone, on your top left you'll see this area here. But if you are having an iPhone, on your top right you'll have 3 dots in this area here. You'll have 3 dots. All right, but if you are having an Android, you'll have 3 arrows here. But if you are having an iPhone, you'll have 3 dots on the right, and an Android you will have 2 arrows on the left. Okay, so we tap on them, and what do we sort by? We sort by percentage. You can see clearly here, if I decide to sort by percentage, you see it will be starting from big to next big to the smallest one. So I will tap on it, and basically it will start with BTC-ST leading the game. BTC-ST leading from one that is performing best to one that is performing poorest. And that marks our first lesson on the 10 lessons that will move you from zero knowledge about making 0.5 to 5% per day to making you a trading expert. And you would see on our screen, using our hacking ash candles purely, that BTC-ST is on the 4 hours time frame in our screen. And the current candle, when we talk about the current candle, we mean this candle, this one, is 2 hours 19 minutes and 41 seconds to end. If we can change to another time frame, I hope this could basically help you. 1 hour. You also see that if we look at our time frame down here, we're using Haken Ash candles. I need to emphasize we are at 11 minutes. No, 19 minutes and 17 seconds to end. And it is talking about this candle specifically. So every candle in this time frame is for 1 hour, and every candle in the 4-hour time frame is for 4 hours. All right. Okay, so thank you so much, ladies and gentlemen, for joining our tutorial for today. And we want to promise you, as a team, we are going to continue to support you. We are going to continue to support you and make sure you get results. So, well, that's our first lesson. See you on to the second lesson, ladies and gentlemen. And I hope it will be available for you very, very soon. So thank you so much. Enjoy your perfect week.
So that's an old video on how to set up your trading view. That's an old video, and because I don't have a new trading view account to be able to create this thing newly, and I think I have a video on how you can. This clear. I have a video on how you can set the time zone, because when you want to use the trading view, your time zone is very, very, very important, so that you will not be using the wrong time zone. Okay, yes, this is. Let's
Send it
just
to every
watch
one
this
of us. I just
video
want to
on how to create the.
share a very quick video on how to set your time zone on TradingView. So just go to charts, any of the coin, just click any of the coin that you already listed. Then when you enter the chart here, click here, enter the chart, then click these three dots here, click these three dots here, these three dots beside that pencil icon. Then go to chart setting here. Then when you get to chart setting, at the section of symbol here, just go down. You just select your location. Set your location. You can see different countries, different location. So I already select my own time zone. This is my own time zone. So that's where to save. Click OK. So that's how to change your time zone. Let me do it again. You click that place. Go to chart types. On symbol, just scroll down. Let me check something. Sometimes it might show all this. So go to symbol, tap symbol, scroll down, then you can change your location. Because if you don't change your location to the right location, you might not be seeing the correct candles and the correct charts. So just want to share this quick video on how you can change your time zone. That your trading view is updated to the latest version before you do this. So thank you for watching. Anywhere you see this video, just like the video, share the video.
So over time, just like every other app, the trading view is always being updated. So some of those locations where all those buttons are might have changed when you want to use it. It will have changed. Now all those plus sign, three dots is not there again. So I think we can go to this place. More settings. I want to confirm first where the time zone is. Those, all those things has really changed. Date format, 4 hours. Okay, I'm coming. Or someone that has done it before can help me. These things always change. Menu. It's not here. I'm trying to locate that time zone because my one is already set. Uh, the 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 the, the enter the coin, click here, and there's now.
ebe ahụ nwee ebupụta ya ọ nọrọkwa ebe ahụ mebikwa ihe kacha mkpa mebikwa.
Zazi, you are ask your question, please. Yeah, you're listening up. Ask, unmute your mic.
All right. Good evening.
Good evening.
Good evening, sir. So I want to ask, why setting up this trading view? That is where we want to see which coins we can trade on our signal. And this signal we are trading will be on our Royal Q app. And I am made to understand that our Royal Q app is using the Singaporean time zone. So if we are setting up our time zone on the trading view app with a view of using it to trade on our Royal Q, will it be wise to use our own time zone or that Singaporean time zone which the Royal Q is using? Or is the trading robot in Royal Q not also using the time zone of Singapore? Because everything that is doing, including the delivery of his profits, is according to the Singaporean time zone. So I'm just asking, will it not make more sense to use that time zone of the platform we are using to trade rather than our own individual time zone? That's my question.
Okay, that's a very good question, sir. The Singaporean time zone does not have anything to do with our trading time zone. Let me reframe my statement very well. This Singaporean time zone does not have anything whatsoever to do with your trading time zone. The Singaporean time zone is only for your trading results. Discover that anytime you make profits, you discovered, I don't know why this is not showing now. When you make profit, you discover that the moment it is already 5 p.m. in Nigeria, it is already 12 midnight in Singapore. So the moment it's 5 p.m. in Nigeria, you will be making the money of the second day from 5 p.m. in Nigeria. That is the only thing that concerns us on Royal Q. It does not have anything whatsoever to do with your trading time zone. So just follow the recommendation and instruction in that trading view setup that you must use your own Nigerian time zone. Because if you can use another country time zone, your analysis will be error. If you're in Jamaica, make sure you put the time zone of Jamaica. If you're in UK, put that time zone on your charts on your trading view. Or if you are using the Royal Q charts, just use it like that. It will still work for you. Or for trading view, you must change the time zone. Because the countdown will be different. If you go and use American charts, their time zone is different from our own. So the countdown of those candles will be different from you that you are in Nigeria, or you are in Ghana, or you are in Egypt. So just follow the instruction. I'm just trying to locate where that time zone again is.
And I show you, sir.
Show me, because me I don't set my own. Don't know where it is.
On chart, click on chart.
Okay.
Then where there is month, May, just touch that May.
Yeah, that's true.
Touch it, you will see it will display.
I should touch month.
May, yes.
You see, a lot of things has changed.
You are not touching where I'm saying, where I'm showing you.
Months at the bottom. Months.
Not a time range, you're not right time range. They look at where they wrote June. You have even scroll when you have 1, 2, 3, whatever. 10,
Okay.
13, whatever. The months we are used to display there. If it's May, you see May. Well, I was seeing May there before, but you have pushed it, the thing has moved.
No, I'm not seeing it too. Are you talking? Let me alight. Are you talking about this area? Let me alight this and
No,
turn it. Yeah, down
not
here.
that area. That area, if you see a month there, before I was seeing MAY, I've tried on my own trading view, just brought it out. You used to write
Okay.
months there. You see May. Click on that month, click on it. Just touch on
See,
it.
this thing has really changed. How will I know that this thing is there?
Touch on the month, you will see it with display. Yeah, like May, MAY. Touch on MAY, you will see the thing with the option will come out.
This thing has changed. Oh. Yeah. How will I know that thing is there?
you,
I can never find it like that because that was not the way we used to check that time zone. I'm
Everything
even
has
clicking.
changed.
It's
It's
not
not
even
showing.
clicking. It's not clicking.
You
No.
will you will touch it and hold. Just touch it and hold. It will display. Just as you
Okay,
can
I'm not
touch,
tapping. I'm not tapping. I'm old. Okay.
type it and hold. It will display.
Oluwa, I don't go back. Oh. Come, let me go. Let me look for another.
Don't look for another coin. Then down the month, you type it and hold. And
Yeah,
it
I
will
don't.
pop up.
I don't go to the future self. I don't go to the
Now month
future.
today now.
Yeah, I don't go to the future. Now, I know this. I don't go to 2055. Okay.
You can say try April now. Just okay. This one is not. It's not the month. It's on month.
Hey, when they use them like this, so what's happen now?
If you are using a laptop, if you right click on it, it will show. Just right
It's the
click on
same thing. No? Just right click on. Right click on where, sir?
where you are telling him. You should just right click.
That is what I'm saying. No, just right click there,
So
or you just
it will
touch it.
show. You will see
Touch
time
code.
zone.
This is where
I've
we are
seen
talking about. Yes.
what I just did. I went down to that time zone here. Down. I just place my hand. Wait. I place my hand like 3 seconds in that show. So not
Yes.
3 times. How would I know that this thing is there? I can never know it. There's no way I can know this is there. No way.
Yeah.
The last video I
Yeah.
did, I know the last video I played now. Where I look at it now, it has changed.
Yeah. Keep on
Anytime you update
updating.
app, just scatter the setting. Anyway, let me just stop here. With this our first lesson. So I think on Tuesday we have to practicalize this with someone that has never used trading view before. We will practicalize it. So let me give room for Mr. Yomi. So now for what he has for us today. You can see the market's already going down. See very big red candle. Very big and gummy red candle. So we need to go and look at the next. I can go cool down seriously. Let me go to the daily chart. See the daily chart. Oh, that last red green candle is going to change to red. You see, because on the 4 hours, there's a very big red candle, very big and gummy red candle. Market is going to pull back very well. See now and the night, just everywhere red. Let me look at the daily chart where this coin can pull back to. Let me check weekly charts. Where can this coin get to? I hope this coin will not get to 154. Okay, I think let me alarm sir, you're meant to do his own thing. Help us analyze where this market can go down to, please. Let me stop my screen sharing. Market is going to pull down seriously. Let me make you a co-host.
Yeah, please make Oluwabumi the co-host. That's what I'm using my wife's phone. Sorry, my wife's laptop.
I was wondering which one be Oluwab. I know my team member. Okay, so I made it. Okay, somebody wants to ask a question before Mr. Yomin comes on. Please let him finish, then you can ask your question, please. Let me stop screen sharing. So you can go ahead, sir.
All right.
Help us analyze two coins and let us know where they can pull down to. The top coins, though.
Okay.
Let us know where we can enter. Go ahead, sir.
All right. Yeah, good evening, everyone. So I just want to, like he said, I had somebody after the meeting the last time, somebody sent me a set of questions and I want to try and attend to those questions, then also attend to one or two coins. Before we even do anything, let's go to Nero. I saw something on Nero and I wanted to show us. You know, the last time we were saying that price might retrace. USDT. So now I saw this and I was pained. I will tell you why I was pained, because I should have been in this trade. This long candlestick patterns, this long candlestick you're seeing. I hope you can see my screen.
Yes, yes, yes.
So now this long candlestick, I'll tell you why we had the long candlestick here now. The last time we went on this narrow, if you remember, I said I was going to get into the trade somewhere here. You know, I drew this line and I drew this trend line. The price was like this, it was going up and coming down. All this here had not formed the last time we had a meeting, you know, and I said I was going to look for a candlestick pattern here to keep going up, you know, but nothing formed. If you look at it, price just broke through this trend line. And when you see price break through a trend line like that, and you see a solid candle, you be careful, you know. And I sent a message to the group immediately. If you go to 4 hour, we saw an inverted pin bar. This is the inverted pin bar here. Let me enlarge it so that we can see it very well. Now, when you see an inverted pin bar like this, then you have to be very careful. That's what I sent to the group. And it closed below this line. That tells me price was going to go down. So I didn't take the trade. So now we're going to delete this. This has actually done its work. So I'm going to delete it and I'm going to explain to you what happened afterwards. Now, you know, I was talking about harmonic patterns. So, and I also said that anytime price breaks a previous high, if it's going up, if it's on an uptrend, we always see a pullback. So now, last week, price broke this high. Sorry. This was our last high after price broke this trend line. You see, when you always need to draw trend lines and support lines to analyze the market. That's how I analyze the market. If I don't draw these trend lines, then I will not be able to analyze. So now, drawing this trend line means that if price keeps hitting this trend line and keeps going down like this, and doesn't break it the way it breaks it like this, means that we are still in a downtrend. But immediately I saw a break and price goes this way, it tells me that this trend line has been violated. Price is no longer bullish. Bearish. It has changed. And you can see this is our support line. This horizontal line here is a support line. And you can see price bouncing off it before it now went up. Came back down almost to this support before it went up. So that tells me that price is no longer bearish because it has broken this trend line and it has become bullish. That was what we analyzed last week. So now, and I told you that if a previous high is broken, we always see a pullback. See, price came down here, went up higher than this high over here, gave us a new high, even higher than this high here. You can now see this is a high. I hope you guys know that this is a high, this is a high, and this is a high. Now, and now we're here before we're having this is a high, this one is lower high, this is another lower high. But we now have a higher high, higher than all these highs. That tells me price is no longer bearish. It has changed to bullish. So that one, after establishing that, you can see price went up and came back to retest a high. Which high did it retest? Look at it, this high here. That's what it retested. So what I'm going to do is, immediately you see that, just draw a line. I'm going to draw a line at the bottom of this wick and at the body of this red candlestick bar, the bottom of the wick of the red candlestick and the body. So now let's draw it and we'll see what's happened there. That's the first line. So I'm going to draw. If you want to draw support and resistance lines, it's better you draw it in a range. And I'm going to show you now. Now, this is the range of the support from this line to this line. Now, this was, if you come here, price hit it. This is our resistance. This is a resistance level. Then price came down. Price came down like this, went up, came back to test. So this resistance here has become support here. So before this green candle formed, I will show you what happened. And it will have made me, if I had seen it, I would have entered the trade. Now, if I had seen the price around this level here, this particular red candle here, I would have bought here. And I'll tell you why. Now, I told you that I'm also, apart from me trading, what I just explained now to you, before I say anything, what I just explained now to you is price action. Like I said last week, you need to know price action. Price action tells you what could likely happen on any chart, any financial market. If you know price action, you will know what might happen. So that's it. So now, I told you that I trade harmonics, and I'll show you something here now. I told you that if you see something like an M, this is an M. I hope everybody can see it. Let me draw lines. From here, from this low, you know this is a high, this is a low, and we are on 4-hour time frame. So from this low to this point, that's the first, that we call it a bullish impulsive movement. Then price did what? Price from here, came to this point. So this point was a pullback. Normally, people who don't know what harmonic pattern is would, when this price was coming down like this impulsive candle, they will have sold and price will have come down. They will be happy when price is coming down, not knowing that price would also do another impulsive move up like this. So now at this point, if I had seen this trade, at this point, what I will have done is that I will have pulled my Fibonacci. That's my wonderful tool that I use. I'll pull the Fibonacci and look at where this pullback stopped. And where did it stop? It stopped at 0.5. Now this 0.5, this is the line here. This 0.382, this is the line. This 0.236, this is the line. So, but because it stopped at 0.5, that tells me that it's going to be what we call a bat. I think you should write it down. People, when I say some things here, please just go and study on your own. And if you know that you don't understand it, just come and ask me questions. I'll be able to teach you. So study BAT, B-A-T. Now, once you see that the pullback is at 0.5, it's automatically a BAT. You don't even bother. Though at times, price might from here start going up. Sorry, let me delete this. Price might from here start going up. So if price had gone up and had broken this high, right, after pulling my fibs, if price had continued going up like this and broke this high and went higher than this high here, then it's no longer a bat. But because price did not do that and price came down, it will stop at 88.6. That is where the price will stop before it starts going up. Because I told you when it forms something like an M, does this look like an M? Yes.
Yes.
Yeah. So when you see this M is a bullish pattern. When you see price make an M like this, is a bullish pattern. And it is this our entry point. This will be the entry point, 88.6. Look at 88.6 here. That's where you enter. So if I had seen this trade when it was around this point and price got to this red candle here, I will have just placed my entry here without even price getting there. I will place my entry there and place my stop loss below this point. In case price keeps going down to take me out, I will place my stop loss just below this point. And this point, they normally label. I can't label because I don't really know how to use that tool Mr. Maribalusi uses to draw. You'll have to teach me one of these days so that I can label all these my drawings. So if you're going to label this thing, we usually label it X, A, B, C, D. So this D point is always the entry point. This X is always where we place our stop loss, below X. So now, if I had seen price at this point, I would have placed my entry at 88.6. And 88.6, the price there would have been 0.004241. That's where I would have placed my entry. And I would have just gone to sleep. And I would have just come and I would have seen that. So you now see that immediately price got here. We had what? We had a bullish engulfing candlestick pattern. That's another entry. That's another confirmation. The first confirmation was this M pattern that formed. That's our first confirmation. The second confirmation is this bullish engulfing candlestick pattern. Let me delete this so that we can see it very well. So this is the second confirmation. Now, the third confirmation is another reversal pattern that I usually say 1, 2, 3. You should go and write that down as well. 1, 2, 3 pattern. Go and learn it. 1, 2, 3 pattern means that price got to this point, gave us a high, came back down, but it didn't go below this point. That tells me price is about to start going up. If it had come below this point, then it would keep going down. But it shows that this support was strong, price struggled and could not reach it. And if you see, there's another small bullish engulfing candlestick here. Look at this red candle is smaller than this green candle. That is the fourth confirmation. So if you have like 2 to 3 confirmations in a particular strategy you want to take, you are good to go. And why did this pattern work? Because it retested that high. These 2 lines that we drew, right, is support. So it shows us that that support was strong. So when I saw this thing, I was crying. I was like, oh, I should have taken this trade. I missed it entirely. Do you understand? So that is it. That's how to trade in any financial market. So this particular pattern, again, I'm going to mention it again, it's called a bat. And a bat is when you pull your Fibonacci from the bottom of the pattern to the highest high. If you pull the Fibonacci from the bottom to the highest high, the retracement, the first retracement, where did it stop? If it stops at 0.5, then it's a bat. That means if it stops at 0.5, that means when it goes up like this, price is going to go to 88.6. Definitely. It happens 99% of the time. So that is how to trade this bat pattern. And I said that, if people don't know this harmonic pattern, what people would have done, seeing this candlestick, this inverted candle, they will sell. And if they sell, they will think price will keep going down. But once they see that price is coming up against them, they get out of the trade, not knowing that price was still going to give them more money in the market. Do you get? So That is this about that. So now price is now around here. What is happening is that price, I told you when price breaks a high, there's always a retracement. We had a high here. So price is retracing. I'm not saying you should go into this trade though, because this trade is too late. The best way to enter a trade is to enter from the bottom. I know Mr. Ribalusi always tells us this. If you don't get it from the bottom, forget it. Because if you enter here now, let me say, for example, price retraces to this level, and you enter here. What if price wants to come back here to retest this place before it keeps going up? Because price also does that. At times, price will retest your entry before it keeps going up. That's what happened here. Do you get? Price went up, came to retest our entry, and keeps going up. So this is the 1, 2, 3 patterns. So that's one of the questions that the person asked me, that what are the let me try and look at the question. Sorry, it's on my phone. I'm trying to open my phone. Excuse me. It said, what indicators or tools or price action nuggets do you suggest regarding trend reversal? This is one. This 1, 2, 3 pattern is good. Let me give you an example. And trend reversal always happens at support or resistance. Trend reversal always happens at support. It cannot happen in the middle of a trend. No. When trend reversal is happening, it means it has either hit a support or it has hit a resistance. Let's take this resistance, for example. Let's assume price went up like this and it hits this resistance. You know, these two lines in between it, between this lower line and the upper line is our resistance. So let's assume price got here, right? Came down like this, then got here again before it starts coming down. This is 1, 2, 3 reversal pattern. That's why price will come down. So why would price come down? Because price made this impulsive move up, hits resistance, came back up. The bulls tried to push the price up. They pushed it up to this point, but they couldn't push it beyond this high. Then the bears took over and pushed the price down. So this is a very good reversal pattern. 1, 2, 3 pattern. That is one. Another reversal pattern that you can use, we talked about it last week, is called head and shoulders. And me, I like calling it crown. I'm going to show you the reversal pattern, or the 1, 2, 3 reversal pattern on a bearish move. This one I did now was a bullish move. Bullish move changing to a bearish move. Let me do the one of a bearish move changing to bullish move. Let's assume price is coming down to support and price gets here, right? Then price makes a move up. The bulls tried to push the price up. Then the bears came back in to push the price down, but they couldn't push it beyond this level, and price starts going up. Oh, sorry. Price starts going up. So this is 1, 2, 3. So your entry point is either 2 in 2 points. It's either you enter at 3 or you enter above 2. But the safest place to enter is above 2. Why? Because if you enter at 3, what if price keeps going down? It will take you out. But when you enter at 2, you know I told you that once a high is broken, that means price, once a high is broken, what happens is that price goes for the next high. You know, I'll show you an example now. I saw an example somewhere and I'll show you. Once price breaks a previous high, it will go to the next high. That's the target. Let me close this. So I hope you have understood the 1, 2, 3 pattern. So this is for the bullish move. Bullish move is here. So let's go to, I saw one pattern somewhere, XLM. Now on this XLM, you will see exactly what I've been saying about pullback when the previous high is broken. Now look at this. This is our support here. Sorry, I wanted to Sorry. Now, this is support here, and I'm going to draw a line there. Anytime you see price come down, get to a point, and it starts going up, and it doesn't get back to this point, it has become support. It doesn't get back down to break this particular point. That's a support. So what you do is you draw two lines there, like I drew the other time. Draw close to the body.
Or the wick.
Then at the wick. So this is our support range. So now look at what happened. Look at what happened. You can see that price went up. This is our first high here. Now price went this way, came down, went up, broke this high, gave us a new high here. But this high was not higher than this high. So this is actually resistance. You can see that this high and this high are almost the same. But what happened? The resistance pushed price down to come back to retest this high. So even here, you can draw a line there. Sorry, I don't know what's going on. Those lines coming up on the screen. Can you see the red lines coming up on the screen?
If you are drawing on that, please stop it. When am I be drawing?
Yeah, there's so many lines on my chart.
When am I be drawing on that stuff?
So now you can draw a line here. So this line tells me that this particular resistance here became support here, and price went up. You can see that price now started going up again, broke this resistance. This is another resistance here, and price came back to retest it. This is still resistance, this level here. There's another resistance. So it's like a law. Once you can see that this is our first high, price pulled back, went up, came back down. Price started going up, going for this previous high, broke the previous high, now it's pulling back. So if it keeps going up again, the target will be this previous high. I hope you understand. This is the low, this is the first high. Price came back down. As it was going up, its target is this high. So it will break that high, come back to this to retest it. These are next target. So if price is going up again, that means this is the target. So if you are buying here, where you should put your first target is this high, because price will definitely target that high and see if it can break it. If it breaks it, then it will pull back. So that is what is happening in this particular chart. So another
sorry
question.
for interrupting you. Are you saying that current resistance level that has been broken by the last current trend, there's possibility of a pullback up, or is it not going to retest the next support down there?
Okay, so let me answer this question like this. I'm going to draw a line to answer your question. Sorry.
Don't know who drew this.
I don't know. I want to go out of this and I can't. Okay. All right. So this is what I wanted to do.
Do that. I don't know who drew. Somebody drew on this thing.
So what you do is that, I told you how to pull. Let's pull trend line, a bullish trend line. So you start from the lowest wick here, which is our low. You connect it with the next low, which is this one, and you pull beyond it. So this is our trend line. And that trend line we just drew, because we drew it and it's going up, is a bullish trend line. It's an uptrend. So if the only time you can decide that this particular trend is no longer bullish is if it breaks this line. If it breaks this line now and goes lower than this particular point to this particular point like this, then I can say it's no longer bullish. It has turned to bearish, because this low is now higher than this low here. But what could also happen is that price can just touch this trend line here and go up, which tells me that it's still bullish. So, and it's still a retest of this high. So, but if it breaks it, so that this bullish trend line that I drew now is now our guide. So if price gets to this bullish trend line and it gives you a bullish engulfing candlestick pattern, gives you a 1, 2, 3 reversal pattern, and the way I'm looking at it, if I go to a lower time frame, I can see a Gartley pattern. I'm sorry, a harmonic pattern. So let's go to a lower time frame. Excuse me. I can see something like an M there. I don't know if anybody can see it. From here, this is price goes up. From here, from this particular point, price goes up like this, came down, goes up, and it's coming back down. That's like the M that we did before. Let me draw lines to show you. To get to a point where once you master this particular thing, you'll be seeing the M everywhere. You'll be seeing it even without people telling you. This is the pullback that we're talking about. Now, this is the next high. So what I now do is I'll draw my Fibonacci from here. And let's check if the pullback was at either 88 point, either 0.5 or 0.382. Those are the two levels that gives you a bat. So now we can see that it is at where? 0.5. So most likely, okay, there's something I did not say. How you can confirm. Okay, I'll do it now so that we can understand. So now you can see that price got to this point. I didn't draw this line very well though, because I didn't see it before. This line is supposed to get to this week up here. This week up here. So that's why I pulled the Fibonacci from this level to the week. So now the retracement is at 0.5. Now, this might most likely be our entry point. This 0.86. You can see that 0.86 is somewhere here. Okay. This one, I will not enter it. Why? Because our entry, this 0.886, which is supposed to be entry for BAT, is below our trend line. So that tells me that I should not even go into it. I did bring this 0.886 was this line here, which is 0.786. I will have gone for this trade. I'll have put my entry somewhere around here. I hope you understand what I'm saying. Now, another thing you can do is, the way you also confirm is that you pull your fibs again from here to here. The entry must coincide with 1.618. If I'm confusing you, please let me know. Okay. Okay. Now, how do I explain this now? Okay, let me do it this way. Let's go to Nero again. So the way you confirm this entry, I told you that it's good for you to have like 2 to 3 confirmation before you enter. One of the confirmation is candlestick pattern, this reversal pattern, 1, 2, 3 pattern. And also, once you see that this is forming and price is already here, this particular level here, which is our 0.886 level, must coincide with 1.618. So if I pull this fib now from here to here, the fib level here should be 1.618. If it is 1.618, then that is another confirmation for us. It gives us like a good reason to enter the level. You can see that, see, this level coincides with 1.618. So now we have more than 4 confirmations in this trade. We have this 1.618, 0.886, We have 1, 2, 3 pattern. We have the bullish engulfing candlestick pattern. There's no way this trade can fail. Do you get? So those are the ways you confirm your trades in harmonic patterns. So I don't know if I'm making sense. So if you have any question, you can ask while the training is going on. So the next thing I want to do now is BTC, my favorite coin.
No, draw this thing.
This thing that drawn. I hope they can delete it. Let me see if I can delete it. Can't delete it. I don't know who drew this.
Click that edit button.
I should click what?
Wait, I think I can do it from here.
Okay.
You are the host. There is the edit button on your screen. You will see something like a
Edit.
ray. Are you not seeing a pencil-like button on your screen?
A what? A pen size.
Pencil-like button. Edit
Yeah,
button.
I've seen it. I've seen it.
Click it. You will see eraser.
Okay, I've seen it.
Or
Okay.
back button. You
Okay,
can
I've
click
seen it.
back.
I've seen it. I've seen it. I've seen it. Thank you. Oh, okay. All right now. Okay, I've seen it. Yeah. All right. So now this is BTC, and BTC is doing what I expect it to do. Anyway, it's really, really working according to what I think it should do. Now, what price has done now is that price has gone. So let me make it smaller. Yeah. Now we are still having a strong trend, a strong bullish trend. So we are still bullish because this is our bullish line, trend line for this weekly time frame. This is our trend line. And we can see that price is above the trend line. That tells me it is bullish. And what price did, price came down from here, gave us a high, went sideways, gave us a new high. Price came back to retest this level. So what is price doing now? Price is going for the next high, like I told you just now. If we have a new high, price will always go for that high. So price is attempting to break this high. Once this high is broken, the sky is the sky is the starting point. So that's my own analysis for Bitcoin on this weekly time frame. If you go to monthly time frame, it's even better. Monthly time frame, we have a very long bullish engulfing candlestick here. Look at this. This green candle is engulfing this one. This is a very good green engulfing candlestick pattern. And we have another strong candlestick pattern, candlestick that is coming up. And we just have a small wick above it. What is the wick? The wick is just selling pressure from people taking their profits. That's why we have this wick. And you can see that it's just very small. And today is the 18th of May. So we still have like 12, 13 days to go in this month. So hopefully before this candlestick closes, if this candlestick closes solid, as in if you have a solid candle closing above this line here, then that is it. So that's it now. So if you now come to daily, there was an analysis we're doing on daily. I still think price will go up. So, and I'll show you why. Now, we are, and what immediately I look at this trade, I'm seeing a triangle. And I'll tell you what the triangle is. Look at this high. You can see a lower high here. You can see another lower high. You can see another lower high. So this is the highest high in this particular, this candle. This is the highest high. Though this one is slightly higher, but it didn't break it convincingly. So we can count this as resistance because the price did not go very high. Had it been price got here before we saw this week, then I would have said this high has been broken. But the way it is now, it seems as if it's resistance. But I can also see another high. I can see a low here, a lower low, a higher low, a higher low. So I will draw the lines to let you see what I'm saying now. So I'll connect this particular point to this point. You will see the triangle once I'm done. Now I will connect this high, right? Like this. If you go to a lower time frame, it will be better. You can see the triangle now. This is the triangle. This is the triangle. So let's go to a 4-hour time frame. Yeah, it's even better on the 4-hour time frame. You can see now that, yeah, this is the triangle. So what happened, like I said something last week, when you see price trapped in a triangle like this, what it means is that price is struggling to get out of this place. Price came down from here, hit the bottom, hit the top of the triangle, hit the bottom again, broke the top of the triangle, came back to retest it, because when it broke, this green candle is the break. This red candle is the retest. Went up again, came back to retest the triangle. So price has been retesting the top of this triangle. So now it went up. What is it doing again? It's coming back to retest. It's still retesting this triangle. So price might come down to this level. You know, this is a bullish trend line. We might have something like this. Two scenarios. We might have something like this. Price getting to this point, then going up. Or price can start going up from here. So those are the two scenarios I have. But because of this bullish, bearish engulfing, what do you call it, candlestick pattern, this second scenario might not happen. Do you get? Because yeah, it might come down. And my prayer is that when it comes down, it doesn't break this line. Because if it breaks this line, it's going to come down here. And if it breaks this level, it's going to keep going down. If it breaks this level, it's going to keep going down. Do you get? But if any of this, this line, if any of it is strong and price bounces off it, it will go up. So those are the scenarios that can happen in Bitcoin as we speak. So that is what I feel. Let me see another question he asked. He said a trade is on the move in profits, but has been taking. No, sorry. A trade that is on the move in profits, but has not taken. No, sorry. A trade that is on the move in profits. No, I think he wants to say that a trade that has moved in profit, but profit has not been taken. Which is best, to withdraw or follow the trend? That question is a bit confusing. What I usually do, and I always say it. What I usually do is that I'm somebody that can't trade without stop loss. I protect myself all the time. If I'm going to take this trade now, if I'm going to risk it and take this particular trade here, this BTC, what I'm going to do is I will buy. At times I can be an aggressive trader. I will buy at this point, but I'll put my stop loss below this low. A tight stop loss, because if price breaks this low, that means I was wrong, and I'll just lose small, and I'm out of the trade. I prefer that than for me to be saying it will go back up, and price keeps going down. No. I can't handle that emotion. So it's better I lose small and I'm out, and I look for another way to get in than to be trapped in the trade. So that is number one. Then number two, let's assume that I bought at this particular point. I'm just saying, let me say, for example, for some reason, okay, let me say because of this bullish engulfing candlestick here, I bought at this particular line, and price started going in my favor, and I had put my stop loss around here. Let's assume this is my stop loss. So the way I trade is that what I will do immediately that price has started going up, what I will do is I will move this stop loss from here. Excuse me. I will move this stop loss from here, and I'll move it to my entry level, or slightly above my entry level. That's what I will do. And how do I do that? It's just the price. Let's assume my stop loss was at 101,221, 101,221. Let's assume that's where I placed my stop loss. I will just move it to 103,185. That's all. And this is my entry. My entry is 102,889. So if I do that, it means I cannot lose if price comes down and takes me out, I can never lose in this trade again. The trade has been termed, it will be termed a safe trade. So if you do that all the time, you will not be losing money most of the times, because at times price will go in our favor. Then we'll be thinking it will still go higher. Then it's just come down and be going against us. If you don't use stop loss, you'll be saying it will come back. But if you had moved your stop loss above your entry and it's coming down against you, will not even bother. It will just take you out at entry and you have not lost anything. So that's what I would do. So that's how I would answer that guy's question. And what I also do is that if it keeps going up, I will show you what I normally do. If it keeps going up, let's assume price, after putting my stop loss here, let's assume price keeps going up and gets to this point. What I'll do is I will wait for price to retrace. If it retraces this way, right, and it starts going up again, you know, I told you that it will aim for the previous high. If it breaks this high and goes above that previous high, I will move my stop loss from here, from this point. I will change the price to this point. I will leave some gap between this pullback and where I will place it. I'll place it around 105,553. What have I done? I have locked in this much profits from here. I've locked in profits from here to this point. So which tells me that if price comes from here and comes down and hits my stop loss, I'm still in profit. I still made money. Do you get? Instead of you saying that, oh, you know, it has not hit my target. No, that's how to protect yourself in trading. That's what I do most times. You will see in the chat, most times I'll tell you that I was taking out in profit. This is what I do. So I don't know if anybody has any question. I think I'm done. I'm done. So I don't know if anybody has any question or anything that you want me to address.
Okay, let me just clarify some things on what you have been saying. I really appreciate your analysis. I want to be seeing more of the analysis because I told some of us on Friday when we were now around, I like this kind of analysis. I like technical analysis that is somehow deep, rich, but not complicated. But most people that are new to using of, because you are a versatile and an experienced user of using trend lines. And most of my team members, I train them mostly using indicators, but the fundamental way of learning analysis is using trend lines, which slowly, gradually, which they will get. You know, is mostly using the language of future trading. I want to put my stop loss here. I want to lock up my profits here. Everything he's saying, even if we are doing spot trading, is very is applicable even on RealQ. If your profits, if you have analyzed your trade and you don't want it to hit a particular level where to kick it out, you can actually place it on RealQ if you're even doing spot trading. You just go to your RealQ app, enter it, click on sell button, then that particular price that you want the bot to just sell off without going more below your entry level, or maybe you enter at a particular price like maybe 103,000 and you are forecasting that it can reach like 106, and in case the coin now pull back, so before it pull back to your entry price, you can lock it up maybe around 105 so that it won't go lower to go and touch your entry price or lower. You can do it on RealQ. Just go to your sell button, put the actual price, the limit actual price you want the bot to sell off, and end your trade, because it's using more of a language of features, and some of us here are not doing features. He has done an excellent analysis of today, so really appreciate you so much, sir.
Yeah.
So if you have any question for him, please
Hello,
ask.
sir.
Okay.
Hello.
Hello,
go
sir.
on.
Good evening,
Go
sir.
ahead. Good evening.
I am the child you have been answering his question for so long,
Oh,
sir.
okay. Okay.
Regarding the question I didn't answer, so about what I meant was that if you set a target for a particular price, but so far price moves in your favor, but you haven't entered the trade. I'm wondering if it's better to leave the trade than go look for another signal or to still follow the trend. Which one, sir?
Okay, let me tell you something. One thing about me is that you can see the way I analyzed the particular trade just now, and I told you that I missed it.
Yes, sir.
So you see, as a trader, you must have rules. You must have rules. And that is very, very important. You must be
Yes, sir.
disciplined. And if your rules are not, if you let me give an example. If you have like 5 rules now, you're a trader, you have 5 rules, and
Yes.
one of the rules has not been met, you don't
Yes.
enter the trade. No matter, even
All
if the
right.
trade goes in your favor, you don't
All right,
enter the
sir.
trade. That is discipline. Do you get? Let's say, for
Yes,
example,
sir.
now you wanted to enter a trade and the trade has gone, and you wanted to enter, probably you wanted to enter. Let me use my screen. I don't know if my screen is still
Right.
shared.
It is, sir.
Okay. Let me say, for example, you want to enter a trade here, but you now left your computer, you now came back and you saw that the trade has gotten to this point. Forget it. You have missed the trade. You have missed it. Just forget it and go and look. See, there are many, many opportunities to trade out there. Many opportunities. So that is number one. Number two, okay, let's go back to that narrow. Let me show you my own rules of trading that particular pattern. You see this narrow. My rules are this. For example, price must be at this particular, this should be my entry point. And this entry point is always 0.886. That's number one rule. Number two rule, if I pull my Fibonacci from here to here, and this particular entry point is the same as 1.618, that's number two. Number three, this pattern, if I see a bullish engulfing candlestick, that's another rule. Number four, if I see this 1, 2, 3 reversal pattern, that's another rule. Number five, that's all. I think that's all for now. For this particular pattern, that's all. So if I see out of these four rules now, if I see 3, I will take it. Do you get?
So basically, I agree for
And number 5 rule is that if I don't enter at the bottom, which is here, this is the bottom of the entry. This is the exact entry. If I don't enter at the bottom and price has gone, forget it. Go to the next trade. So that's why I'm saying from the beginning that I missed this particular trade. Then there's something that you said. Let me quickly, I saw another question. You said a scenario where there is different indicators on time frames, e.g. 4 hour down to 1 hour, up to 15 minutes down, up. You said 15 minutes down. What time frame
right.
would recommend, sir, or consider superseding? Also, must the time frames coordinate with each other, sir? Maybe at least 2. Okay. If you were here last week, I said that excuse me, if you are in your room now, I don't know if you're in your parlor, and you are inside your house. I told you that if you want to get the overall view, exactly what is happening in the market, what do? You go to a higher time frame. A higher time frame is like you being inside your house. You now launch a drone. You want to know what is going on in your environment. You want to know what is going on maybe like 100 meters away from you. If you use a drone that has camera, you will see the view, the landscape of your environment. You see the aerial view. Do you get? That is what higher time frames, that is what they do for you. They tell you what is happening in a wider, you have a wider view of what is going on. Do you get? And when you now see what you have seen, like for example, this particular daily and weekly time frame is telling me that price is bullish and our price is going up, right? Because we have a high, higher high, higher high. That means price is going up. So that price is bullish. So what you now do, you have determined the trend. The trend is what? Is up. What you now do is you go to a lower time frame and go and look for opportunities to buy. Let's go to 4 hour. You go and look for opportunities to buy. And this is the opportunity to buy. So that is why you will always make money if you follow the trend. Do you get what I'm saying?
I love it, sir. Yes, sir.
Yeah. So you have seen that in weekly time frame, you are seeing that the trend is bullish. So you look for
Yes.
bullish opportunities. You cannot see that price is bullish in a weekly time frame. Then you go to 4 hour and you are selling, you will lose money because price is bullish, price is going up. Do you understand? So if you do
Yes, sir.
that, you will not, it is only when it has changed. If you go to the higher time frame again, for example, you go to daily time frame and you see that price is no longer bullish or it's become bearish, then you go to lower time frame and you start selling. You look for opportunities to sell. So if you do that, you will not lose money. Let me give you an example here. Now, weekly time frame shows that price is bullish, right? Daily time frame shows price is bullish. 4 hour time frame shows price is bullish. Do you get? So if you buy, you will make money. Do you understand? So most time frames will show you almost the same thing. They will show you almost the same. Weekly shows bullish, daily shows bullish, 4 hour shows bullish. If you go to 1 hour, you will see bullish as well. So buy.
All right.
So
Just wanted to know
that's
that.
it. So it
Those are my
doesn't
questions.
it doesn't matter. Your analysis should be done on higher time frames. Your entries should be on lower time frames. You can even go to 15 minutes time frame and buy. When you see, that is if you see I don't say just you have to go there, look for your what do you call it? Your pattern of trading. How do you trade? Are you at, if you go to 15 minutes time frame now, you have seen a bullish, you have seen that weekly time frame is bullish. You come to 15 minutes time frame and you see a bullish pattern, a bullish engulfing candlestick or something. Do you get? Then you buy.
Yes, sir.
Like for example, now look at this now on the weekly time frame. See what is going on here. Weekly time frame is just a smaller version of what is happening on the higher time frame. This is support turning, resistance turning to support here. If you trade all the time and you understand all these things, once you open your trade, you will see, once you open the chart, you will see exactly what the chart is saying. So immediately I open this now, I saw a key level. Excuse me. And where's the key level? Look at resistance here, turning to support here. So look for opportunity to buy here. Wait for a candlestick pattern to form. Wait for something. Do you get? Wait for 1, 2, 3 pattern.
Yes, sir.
You can wait for 1, 2, 3 pattern. Let price do something like this. Here now. Look at. You can even see pin bars. You can see pin bars. See, that shows you that this pin bar. This what you're saying now is that buyers are trying to buy. That's why you're seeing these pin bars. Now you can wait for something like this. Do you understand? You put your stop loss here. It might not be so that tight. It might just leave some space. It might be like maybe somewhere around here. If your accounts can take it. If what you are going to lose from here to here is not more than 2% of your account, then you can put your stop loss here. But if it is, you have to raise your stop loss higher. I hope you get what I'm saying. You have to take your stop loss so that you don't lose too much. Don't go and be risking 10% of your account and say you want to double your account. You see, most times, I've been trading for more than 18, since 2006. That's when I've been trading. I have blown my account so many times. Blown as in I've lost millions in trading. Do you get? And how do you lose millions? Is when you don't follow your rules and when you don't follow strict money management rules. And what is the strict money management rule? You have $100 in your account. In any trade, you must not risk more than $2 to $3.
Your risk to reward ratio.
That is it. It should be what do you call it? It should be 2% of your capital. That's what you should risk. Do you get? So, and if you risk if you use $2 to $3 of your account, that trade should be able to give you $9.
Exactly.
Or at least $6. So that is how to trade. That is how to do money management. Money management is risking little and making more. Do you get? So that's just it. So I don't know if I've answered your question, sir.
Everything, sir.
All right. Thank you so much.
Thank you, sir. Thank you, sir.
Yeah, you're welcome, man.
Another question for our guest. Any other question? This is another question of contribution. Okay, if there's no question, our time is really fast spent, and the remaining topic that I want to treat with, that will be on Tuesday, because our time is really fast. So I want to appreciate everyone that was on the call tonight. I believe we have learned so much. So I've recorded this section, so you can go and